And welcome back to Dukascopy TV. We're once again joined by technical analyst Bruno Estier. Welcome back, Bruno.
Good morning, Ned.
So 2 weeks ago, you were bullish on the US markets. So has that spread?
It has spread to other markets because we are really in a nice period. We are making new highs in many markets. First of all, let's look at the Nikkei. What we noticed is, of course, a new high above 18,300, and we see here a very nice, impressive rally of the relative strength of the Nikkei versus the S&P 500. And also this new high is made while the yen is relatively flat, so the yen is not weakening. Therefore, this means that these times, this is really the expectation about the equity, which is reflected in the rise in the Nikkei.
So how is it for the other two markets that you prefer, India and China?
Of course, they are slowing down a little bit on a relative strength basis. This is just noticed here on the monthly charts with a little pause. But both here for India is still in a nice uptrend, and very likely we are going to see the highs of 208. And also when we look at China, China has moved out of a long-term triangle for the last 3 years. This is a bullish continuation pattern. That means that we can reach easily the area of 49 in the coming months.
So which other markets are you cautious about then?
Well, we noticed on China that it was outperforming emerging market, and if it's outperforming, that means other emerging markets are a little bit underperforming, and especially in Latin America. And we see here an example of Brazil, where instead of a rising channel, we have a descending channel. And instead of being at the top, we are at the bottom right now. That means as all markets are rising, that probably we will not go through the bottoms and rebounds, but really the momentum has been down and relative strength has been coming down for the last 6 months. This is also tied to, of course, the fact that Brazil is producing some oil, and oil prices have been going down.
However, you were liking Europe in the last couple of months, weren't you?
Yes, and I think it's, I continue to like Europe. If you look, there is a big change in the sense that Europe, which has been down performing or underperforming the S&P 500, is now starting to move up in the last 2 months. And what we have here is also something interesting. We are reaching a level which is relatively key for many people because it's 3,500, and it is the crossing of two trend lines. A rising channel trend line here, which in 2012 and 2014 were joining the tops, and a very long-term descending trend line from 2000, we don't see it here, but and 2007, and it's coming to that levels. But the momentum is still up, and therefore we should expect further appreciation toward 3,800 about.
But as it happens, reaching a trend line also means reaching resistance. So will Stoxx 50 stall?
Well, look, you can have a pause, but let's take the example of the DAX here. And we have an example that reaching a trend line doesn't mean that we are going to stop in any case. It all depends really on the momentum which is down there. And as long as the momentum is up, there is a potential to move through the trend line and continue to go up. And that's what we saw on the Euro Stoxx 50. So we should expect the Euro Stoxx to continue to outperform.
So what are your US targets then?
Well, the US target remains about the same. We mentioned already a short-term target. We are almost there around 21, 35 and 45, which is near this area. And later on, we can expect to rise toward 2190 or 2260 area, which is up this extension of Fibonacci. So we'll see that it will probably take time into the month of June to reach these targets, but we are still in a nice rising pattern with still a rising momentum on both oscillators, the stochastics and the MACD. And maybe we should not forget something else, which is what's happening on the interest rates. And on the interest rate, we noticed that from in February, the yield on the 10 years rose from 165 to 215, and now it's back to 197. So it's again a nice opportunity for many to have some money flow from bonds into equity, because equity is a bit more attractive, and we'll probably not see the rates that we saw at 165 for a little while. We're probably going to move more in the direction of 240. So we should see a lot of flows going into equity, and therefore it's going to allow further upside for all the equity markets.
Fantastic. Well, as always, Bruno, it's been a pleasure speaking
You're welcome.
with you. That's all from Bruno and myself for now. Thanks for tuning in, and remember to keep clicking back to Dukascopy TV. Bye for now.